What's going on YouTube? Welcome back to a brand new video. Today's video I want to explain to you guys a few tips on how you can grow your small account, and by the end of this video I'm very sure you have some knowledge on how you can grow your account and avoid blowing up your account. So before we get into the video, please subscribe to the channel, like this video if you enjoy it, and without further ado, let's jump right into it. So like I said, we're going to learn exactly how to grow our small accounts using some tips that I'm going to share with you in just a few moments. So the first of them is actually the risk management. Now, the risk management is one of the most important aspects of forex trading, and you need to learn proper risk management before you endeavor to try you trade at all. So, what do I mean by risk management? Right, when you take a trade, hmm, when you take a trade on the forex chart, this trade has the probability of winning and the probability of losing, right? So let me draw it out for you so you understand what I'm trying to explain. This is our chart right now. Let me change this to black. So the price is currently moving up, right? And I see an opportunity to buy, right? I see an opportunity to buy at this point and I buy. Now price is moving in our favor and all of a sudden jumps downwards, right? So you know that when the price moves downwards like this and I bought at this point, you know this is a loss, right? So there's something called the take profit and there's something called the stop loss. Now the take profit and the stop loss is going to help me to reduce my loss in any way. So no matter how much the price moves away from my direction, I'm going to be stopped out by the stop loss and it's going to keep me from making more losses, right? And also there's something called the take profit as well. The take profit is similar to the stop loss. So I bought at this point and take for example price went in this direction. Now my take profit is at this point right here. So on hitting my point right here, the take profit helps me to lock up my profits so that if the price moves back below this, I get all my profits, right? I do not lose the already profits that I've already made, right? So that is the concept of risk management, take profit and stop loss. So there are other concepts of risk management as well, which I'm going to explain to you in just a bit. So we also have the lot size and the leverage in risk management, right? The lot size, let me write this out. I'm so sorry for my bad handwriting because I'm using the laptop trackpad right now, so that's why it's so bad. So we have the lot size and we have the leverage. Now, the lot size and leverage are very important aspects as well as the take profit and stop loss on your trade, right? The lot size is basically how much you want to risk per trade, and the leverage is it helps you amplify that amount by just a little bit, right? So the leverage I recommend using on a small account of less than $500 is 1 to 100, right? That is the best leverage you're gonna get, or the best leverage I recommend you to use. And if your account is $100, you want to use 0.01, right? If your account is $200, you want to use 0.02, which means you are using 1% per trade, 1% of your account per trade. That is how much you are risking per trade, and that is a very good risk management. So I hope you understand what I'm trying to say here. So that is the first concept, which is the risk management. Now let's move on to the next step, which is the next step, which is account funding, right? So when I talk about account funding, I simply mean, let's take for example, this month this is my first time of trading, and I deposit $100 in my account. So I deposit $100 in my account, and the next month, right, I made $12 profit on my account before the next month, right? So a whole month and I made $12 profit, right? So that is plus $12 in my account. Now you do not just continue to trade with just this $100, right? Because the more you have in your trading account, the more you can earn. So let's say the next month I deposit another $50 to my account. So the extra $50 is going to get me an extra $6 of profits, right? So if I continue trading with my $100, I would have had the same $12 in the next month, right? Because I think this is 12% profit on every month. So plus this extra $50 I deposited with the new month, that means I made an extra $6, right? So the more you deposit in your account, the more you have, the more profits you are able to make. That is what account funding is for. If you continue to fund your account every month, adding funds to your account, you have the high probability of making higher profits, right? So let's move on to the next step, or the next tip I would like to share with you, which is time frame. Now, time frame is something that most traders ignore a lot. Most traders ignore the time frame a lot, and I really want you to take note of the time frame because it's very important. When you talk about time frame, you simply mean what time frame are you looking at the charts, right? Take for example 1 hour time frame. You have a small account. This 1 hour time frame and the 4 hour time frame is the best time frame for you. You have a Let's say you have a $50 account and you're looking at the 1 day time frame. What are you doing on the 1 day time frame? Right? That is too big of a time frame to trade on a small account. If you have a small account less than $100, you want to be looking at the 1 hour time frame and the 4 hour time frame. Although you can look at the 1 day time frame, 1 week time frame, just to find out the overall direction of the market. But if you want to take your entries, you want to look for your entries on the 15 minutes, the 30 minutes, and the 1 hour time frame. Even the 4 hour time frame is just for you to look at direction, the market structure of the chart, right? So if you want to take entries on a small account like $100, less than $100, you want to use the 15 minutes, the 30 minutes, even the 5 minutes is also acceptable. You can use the 5 minutes, the 15 minutes, 1 hour to take your trade. So that is the best time frame to take trades on an account less than $100. So I hope you understand me, and I hope you guys are getting something. So if you are getting something, please leave a like down below, subscribe to the channel. And the fourth thing I would like to share with you is the overtrading, right? There's something called overtrading in Forex, and most people don't really believe that there's something called overtrading, right? So Forex trading is not going anywhere. You can trade anytime you wish, right? You do not need to check the charts 24 hours a day. You do not need to check the chart 24 hours a day. Simply waking up in the morning, then checking out the chart, seeing where the market structure is, that is enough for you to actually trade or to determine what to do in the market, right? So take a look at this right now. Market is going in an uptrend, right? And the market is currently making this, right? So you wake up in the morning and you see something like this. What do you want to do? You want to wait for the market to actually do something, right? Do something that you know is going to reverse the market. Like me now, I know once the market makes something like this, there's a high probability it's going to come back down. So I'm going to wait for it to come back down like this. I don't need to check the market 24/7. I can just place the buy limits just over here, and the market will activate automatically, right? And I'll just place my stop loss and my take profit. So that is very, very easy. Forex trading, you do not need to check the charts every time. You do not need to overtrade your account. You do not need to trade. All you need to do is just calm down, be focused, and understand what you're doing in the market. You do not need to trade every time. So I hope that that concept, you understand that concept, right? The last one of all is consistency, right? So you want to make sure that you make consistent profits, right? It doesn't really mean you should make wins, always win and win and win, but you want to make sure that the wins you mean and the losses you take are followed by good risk management. Let's take for example, right? You make a loss of $2 8 times, right? You are risking 2% of your account per trade, and you make it loss 8 times. 8 times 2, that is 16. And you have a $100 account, right? On a $100 account, you made a loss of $2 8 times, right? So that is $16 loss. Your account is down $16, right? So now, because you're following proper risk management, next trade you want to take, probably it goes on a profit, right? It goes on a profit, and you make, let's say $6 on just one trade. That is $6 on one trade. You know, this has covered some part of your loss, right? So if you use very low lot size and leverage to trade, and you use very, very tight stop losses, you do not make much losses because you are using a very, very low lot size. If you had used a very high lot size on an $100 account and you traded, you should have lost more than $2 on this account, right? So using a low lot size, using a low leverage, and consistently making profits will help you in your Forex career. So even if you make 10 losses in a row, one profit can actually boost your account back up because you have a tight stop loss, and if you continue doing this consistently, you are going to make profits, right? The losses you're going to make won't affect the profits you're going to make. The profits will actually be more than the losses, which will end up growing up your account. So these are the 5 tips I would like to share with you that I take in my Forex career. So these tips are very, very easy, very simple. You can write them down, jot them down. Early in the morning, just revise, check out the charts, see what they're doing, and I hope you enjoyed it. So if you enjoyed this video, please subscribe, like the video, and without further ado, I'll see you on the next one. Have a nice day. Peace.